Hi traders, hope you're well. Welcome to my video on the MACD Divergence Scanner. So this is an indicator that will scan your charts for MACD divergence, and then you can use these signals for taking trades, whether that's long or short. In this video, I'm gonna show you how you can determine the direction to trading, okay, and read the divergence that the indicator shows you. So you can see I have the MACD Divergence Scanner indicator here on my chart. I'm using the MT4 trading platform. You can use the MACD Divergence indicator on any platform. If it's not already installed, you can find it online as I did with this particular indicator. So MACD Divergence, what we're looking for is this scenario which we have now on the Australian dollar, Japanese yen. This is a 15-minute chart. You can see here the market's making these higher highs, okay, but at the same time, so higher highs here, okay, the indicator does draw these lines automatically for you, these two lines that you see here. So higher highs, and then at the same time, the MACD indicator is making lower lows, so that's our divergence. This is basically a signal that perhaps the market is going to turn around once we see the market making higher highs, but the indicator doing the lower lows. We can expect a bearish reversal, and that's exactly what we're getting now. So your entry could have been on a break of either of these lines. Okay. I think it's worth mentioning that I would not solely take a trade based on the divergence. And it's also open to interpretation. For example, here, okay, you can see the market making these higher lows. So we have the uptrend there. But after this break of this trend line here, I would have been looking perhaps for a trade to the downside anyway, just because if you look at the overall bigger picture here, we are actually seeing lower highs there. So this could have been a good time to enter this particular trade. Okay, so around here on the breakout of this trend line, in line with the overall short trend that we're seeing. We have the confirmation with the crossover of the lines on the MACD indicator here. Okay, so you see this blue line crossing the red. That was our indication of a turn to the downside, especially as it was up here in the overbought area. You know, you don't really want to buy a crossover downwards when it's down here because you'll be at the bottom of a move like this. Okay, so we had the crossover up here of the MACD. We also had the histogram, the MACD histogram there, cross over the zero line to the downside, along with the bearish divergence, lower highs. So plenty of indications there that we were on for a nice short trade around about here, the crossover of these lines, crossover of the line, the bearish divergence, the breakout of this support line, almost an M pattern formation breakout there as well. You see that M there, okay, and even here, in fact, there, see this M pattern, okay, this support level, resistance, lower highs, and a breakout to the downside there. If we just turn on the candlesticks, you can see as well by zooming in. Lower highs here, got various inverted hammers, a few spinning tops there, lots of bearish candlestick patterns. Okay, you got a 3 inside down candlestick pattern as well. Had this level of resistance here. Okay, so there were a lot of signs that we could have been looking to go bearish here, especially being in line with the overall trend and the MACD Divergence Scanner picking it out. An entry perhaps, I wouldn't always just take the entry when the divergence indicator is displayed. As I said, you can use your other price action analysis as we did there, and just perhaps use the indicator for confirmation. Money management, okay. I like to, if I'm taking a short trade, so say we took this breakout here, I place my stop loss above a recent high, so above here somewhere, and then just as price starts falling, just move the stop loss above the recent high, locking in profits first at break even and then at the highs as price drops. Or if we were trading long, I just put my stop loss below a recent low and just trail the price so we can capture as much of the move as possible. We don't want to exit prematurely. Potentially leave lots of pips on the table. Once we get into a good position, we want to make the most of it. So that is the basics of divergence. As I said, I like to confirm with my own. If I just remove these lines here, okay, I like to confirm with my own lines as well. This is what the indicator just looks like as is without adding anything additional to the chart. In this instance, you know, just a bit of common sense. Make sure you're trading in the direction of the crossover of the MACD down in this instance. The histogram doesn't have to be below zero, but some traders take the crossover of the zero as a bearish signal. Okay, you want your bearish divergence at a minimum, which we have here. Okay, and also the lower highs on the chart can help to confirm the trade along with support and resistance. Let me just give you an example of a historical trade. If we look for, should we look for a bullish trade just for comparison? So we find it. We want to find an uptrend first. We have a nice uptrend here. Okay, so what you can look for is you want the divergence first. So you want, let's have an instance where we see the price dropping, but the MACD, okay, so we have bullish divergence here. Okay, you know, the scanner will automatically do divergence for you in real time. However, historically, obviously, you'll need to draw the divergence yourself unless you run the indicator in the strategy tester. But the same principle applies. You look for the MACD making the higher lows in a bullish scenario, whilst the market is making lower highs. Okay, and then we can see around here, we had a crossover of the MACD lines, okay, along with the crossover of the histogram in an upwards direction. We could have taken the trade there, arguably even earlier, around here on this crossover. However, we do have this line of resistance we need to be cautious of. So what I probably would have done is just waited for a breakout of this resistance line here, okay? Then once we had the breach there to the upside, that resistance then holds up as support. If I zoom in for you there, see this resistance, market making lower highs, MACD histogram making higher lows, so that's our divergence. We have a breakout there, then that resistance becomes support, holds up quite well. Got a nice bullish hanging man pattern there. We could have taken an entry there, used the trailing stop and captured this move up here nicely. And then for an exit, as I said, you can use a trailing stop, or you can just wait for a crossover in the opposite direction. Okay, and then just take your profit then. So the indicator is good for helping spot these divergence, but it's really quite easy to do it yourself. Just look for the a downwards trend on the chart and an upwards trend on the MACD for bullish divergence, or a bearish trend on, or a bullish trend on the chart and a bearish trend on the MACD for potential sell trades, and try to trade in line with the overall trend as well. And have good money management, good trading discipline. Don't let negative emotions such as fear, anger, and greed cloud your judgment. The good thing about the divergence scanner is you can scan multiple charts and different time frames all at the same time, which can help you monitor various trading instruments, Forex, stocks, cryptos, commodities, indices, etc., for signals without needing to comb through the charts yourself. Okay, thank you for watching. If you found this useful, please like and subscribe for more, and I hope to catch you on the next one. Take care.